Hello viewers and welcome to the latest episode of the Huddle. Tim Poole here, editor of Gambling Insider, and I'm with Nils Andén, CEO of Kindred Group. Nils, thanks very much for joining us.
Thank you for having me.
A lot we can discuss. You were recently appointed a permanent CEO of Kindred Group and had been interim for a few months. How do you reflect, first of all, on what has no doubt been a busy period for you?
Yeah, absolutely. I think it's fair to say that it's been a fairly unusual year for Kindred in the last sort of 8 to 9 months, leading, of course, up to the announcement of the bid from FDJ. But, you know, generally speaking, I've been with Kindred for a long time, so I'm not new to the organization. So taking over as interim in May was also a fantastic opportunity, right? This company has some very good assets, some very good brands across Europe. And, you know, working with the board throughout the strategic review has been exciting and interesting, and then ultimately coming to what I think is a very good conclusion with the bid from FDJ in January.
As you say, an unusual time for a CEO to be coming in, a lot of change at board level. How do you reflect on where the company is going to go from here and the decisions you've made?
So I think it was fairly clear when we communicated our Q3 report at the end of 2023 that there were some changes that I felt that we needed to do as a company. You know, part of that communication was exiting North America, also really utilizing this moment to refocus on our core markets here in Europe, and initiating a cost reduction package, which I think is a reflection of where we find ourselves in the industry right now. There is an increased burden in terms of betting duties and regulatory costs across all our territories, which means that not only us, but I think any operator in this space needs to think very carefully how they can run as an effective organization as possible, while of course ensuring that we can provide excellent customer experiences, which we historically have always done and which we will continue to do. I think there's a massive opportunity for Kindred as a company by refocusing where we know we have strong brands, strong customer experiences, and really a stepping stone for us to continue to grow and outgrow our core markets here in Europe.
As a company exiting North America, as you said, how challenging is that market? Is it very much a case of there's just a few players taking up a lot of market share, and is it in essence a barrier to entry being a public company that has those quarterly targets to hit and just makes that investment that you need incredibly difficult?
I think being a publicly listed or a private company, I'm not sure has a material impact. I think what it comes down to is, of course, your investment horizon. So when do you expect to be profitable? But also, I think what we've seen in North America is the levels of revenues you need to generate to be able to be profitable. The underlying cost structure in North America is higher than most of our other European markets. You have fairly high taxation rate, you have the market access fees that you need to pay in every state, and also the ancillary costs around the business are higher in North America in terms of payment fees, etc. So I think for us, at the end of the day, it was a fairly easy decision. At the moment, we need those resources to focus on our European markets to enable stronger growth. I still think North America is a super exciting market. It is portraying high growth. It is regulated and regulating in more territories. But at the moment, no one is really making money. I mean, we have seen some quarters from some of the larger operators being sort of EBITDA profitable, but it's still, I think, a far way off where it will be at some point. And I think when that market sort of harmonizes and comes to a sort of more normal setup, maybe we will look at North America again. But I think for the foreseeable future, it's still a very challenging environment to compete in.
Yeah, interesting to hear that further down the line it could kind of return to the agenda. Obviously, you mentioned the FDJ offer and potential merger, and I think that was the biggest M&A gaming story of the year so far. I didn't want to rush straight into it, but here we are. I actually had the pleasure of speaking with the FDJ CEO recently, and she said sort of the planets aligned really. A lot of things were timed quite well, and the strategic exit of the US worked well with that as well. That's what she said. But As the company merging into FDJ potentially, what are your kind of overall views on that deal?
No, I think it's ultimately positive for Kindred shareholders. I think it's a positive for Kindred as a company. And if you take a step back and kind of reflect a little bit about what the key success criteria in this industry are, ultimately it's about managing a fairly complex regulatory landscape in a successful way. It's continuing to develop and provide your customers with excellent experiences. But all of these things take scale, and we've seen that scale has become a more important element in this industry than it was maybe 10 years ago, which is also, I think, with the combination of these two groups, if everything goes through, Kindred as a company and the combined entity is better positioned to succeed in this industry.
Mm-hmm. If you could pick if you could pinpoint one beneficial quality of that deal, would that be scale, or is there anything else that jumps straight to the top of your mind as well?
I think scale is one of them.
Mm-hmm.
I think a very stable, long-term ownership structure that FDJ has today is also beneficial in this industry. I think also tying back a little bit to today's session, we have the Sustainable Gambling Conference here in London, and I think that is also part of it. You have to be able to think long-term around these things to drive not only our company or the combined entity, but the whole industry towards a more sustainable future. And that, I think, will be beneficial in this potential deal as well.
Yeah, absolutely. You mentioned the conference, and we've had a lot of positive things about it so far today. When it comes to long term, the road to journey to zero, as a CEO who's sort of recently been appointed on a permanent basis, what are your kind of views on that target and where you're looking to take the company in that area?
Yeah, so it's as we've always communicated, it's a journey towards zero, and I think in isolation, Kindred on a standalone basis will never be able to get to mathematical zero, because we have customers that come in, we don't know anything about them on day one, and it takes a little bit of time to build up the profile and understanding of their behavior. So pure zero is very hard to do in isolation, but I think the ambition and the fact that we openly talk about the fact that we cannot do this alone. We would be very happy to see other players in this industry adopt similar methodologies, and also to work with the regulators to ensure that there is a level playing field around this, and that this could be something that actually the whole industry can get behind and work towards.
Mm-hmm. Now, bearing in mind everything that we've discussed so far, and obviously the FDJ offer and merger will take up a lot of your time, as it will with FDJ. What's next for you in terms of immediate targets for Kindred? What would you like to see implemented kind of at the top of your list?
Yeah, so I think we've been fairly clear that we have a long-term target, which is maybe not this year or maybe not next year, to really have a footprint of podium positions in all of our core markets. And we have that in certain markets. We're the number one operator in the Netherlands, for example, and we're top 3, top 5 in many of our core markets. But for me, it's really about ensuring that we can take that next step up and really create podium positions in all of our core markets. But that is, of course, the long-term ambition. I think the immediate ambition, which we've also been fairly clear, is, of course, to grow quicker than the market in our core markets. And I think we're very well set up to do that. Also now with the focus on our core markets, not only from a marketing investment perspective, but also from a development resource perspective and general focus in the company.
Mm-hmm. Well, Nils, thank you very much for your time, and best of luck with everything you're looking to achieve this year and beyond.
Thank you very much.
Thank you.